Welcome to the Rudick Report. Today is Wednesday, March 15th, 2023. Well, the economic debacle and spin from the mainstream media and the White House continues. Despite the fragile state of our economy, you would never know something was wrong. But a recent report showed that assets held by America's banks are worth $2 trillion less than is stated in their accounts because of unrealized losses, like those which triggered the collapse of Silicon Valley Bank, as study suggests. An unrealized loss occurs when the value of an asset has decreased, but it has not yet been sold. An unrealized loss is considered unrealized because it only exists on paper and is not taxable until you sell the asset for a profit or a loss. A run on the banks would leave customers at nearly 200 institutions facing losses of up to $300 billion. The value of assets across the U.S. banking system is $2 trillion lower than suggested by their book value. Those assets include Treasury bonds, whose value has decreased significantly across the past 12 months because of an aggressive campaign of interest rate hikes by the Federal Reserve. Silicon Valley Bank's collapse was partly because executives used its growing customer deposits to buy bonds, then lost money as it rushed to sell them for a loss when customers started pulling their money out of the bank. Researchers behind this new report, published on Monday, said many more banks also have unrealized losses on assets that are worth less than when they were purchased. Their figure of $2 trillion overshadows a recent estimate that U.S. banks are sitting on unrealized losses of $620 billion. Silicon Valley Bank was taken over last week by the Federal Reserve Deposit Insurance Corporation, which typically insures customer deposits of up to $250,000 if a bank fails. Regulators then took a highly unusual step of also covering uninsured deposits amid fears of an indirect effect of SVB's customers whose accounts were well above the $250,000 FDIC limit, and they could not access their money. The new paper said if half of uninsured depositors, those with deposits in excess of $250,000 across the U.S. banking system, decided to withdraw their money in a crisis, nearly 190 banks would be at potential risk of harm to insured depositors, with possibly $300 billion of insured deposits at risk. If uninsured deposit withdrawals cause even small fire sales, which is a sale of goods or assets at a very low price, typically when the seller is facing bankruptcy, substantially more banks would be at risk, the researchers said. These calculations suggest that the recent declines in bank asset values significantly increased the vulnerability of the U.S. banking system to uninsured depositor runs. The paper was written by Erica Shui Zhang of the University of Southern California, Gregory Malvos of the Northwestern University Kellogg School of Management, and Tomasz Piskorski of Columbia Business School, and Amit Seru of Stanford University. Treasury bonds like the ones bought by Silicon Valley are usually a safe investment. They pay a fixed interest rate over a set period. Then the initial investment is returned when the bond matures at the end of the time period. However, investors can take a loss if they need to sell the bond before it matures, as factors like interest rates can impact its market value. In most cases, large banks and institutions hold bonds until they mature. The recent incidents at Silicon Valley Bank and Signature Banks have caused fears of a contagion in the banking industry, which has precipitated the recent damage control by the White House, who came on live TV to try to calm down investors, and from mainstream financial news channels, who told the line of their handlers. The report is alarming because the estimate is far greater than the recent assessment by the chair of the FDIC that unrealized losses at U.S. banks were around $620 billion. On March 6th, Martin Grutenberg told the Institute of International Bankers, most banks have some number of unrealized losses on securities. The total of these unrealized losses, including securities that are available for sale or held to maturity, was about $620 billion at year-end 2022. The White House claims that the banking industry is safe and sound, but in a recent announcement, the Justice Department and SEC stated they will investigate the collapse of SVB and the two executives who cashed out millions in shares before it was seized, indicating that things are not as they seem. Ousted CEO Gregory Becker and CFO Daniel Beck both sold their shares 2 weeks before the bank's panicked customers made a run for their cash. Becker cashed out $3.75 million of stock in a pre-planned automated sell-off, while Beck ditched about $575,000. Neither of them has commented on their banking crisis, nor have they been seen since they were taken over by the feds. So just like the fake numbers being reported by the White House in regard to unemployment, job numbers, consumer price index, inflation numbers, etc., this proclamation from the White House about banks being safe and sound is, in my opinion, another fake story, as it is clear that the banks are indeed in trouble and are sitting on a time bomb. Clearly, there is a liquidity crisis happening across the banking sector. Keep your eyes on the next bank to fall. Keep your eyes on Credit Suisse, Switzerland's second largest bank, as it saw its shares fall by about 5% in early trading on Tuesday to a record low for the company after it confirmed some $8 billion in losses in 2022 and admitting that there was material weakness in its accounting system. Things are about to escalate in the near term. This is not financial advice, but I can only tell you what I would be doing, and that is to get food, get water, get some cash for emergencies in case the banks continue to have runs, and if possible, get out of debt. Dark days have indeed arrived, and the markets are in trouble. Even with the Fed being the buyer of last resort, the markets are in deep trouble. They can no longer hide the contagion with their fake numbers and spin. Get ready. Again, not financial advice, but if you can, get some gold or silver to hedge against this incoming crash. These commodities cannot be suppressed forever. There are many places to buy them: SD Bullion, Money Metals, JM Bullion. These are just a few reputable organizations to purchase from, but you can use whoever you want. The point is to prepare for the eventuality of a massive financial crisis, which looms closer and closer every day. Thank you for listening. If you can, please support this channel by buying me a coffee or by visiting my affiliate links. Your help is very much appreciated. Until next time, this is the Rudick Report.